Hello, I'm Rachel and you're watching 𝐊𝐿𝐴 TV live from Sydney. This is the Stocks in Action show. Let's have a look at the ASX 200 and the ASX listed stocks that are trending today. Today the S&P ASX 200 is down just 6.1 points today to 7,289.3. The bottom performing stocks in this index are the Sky City Entertainment Group. Their shares are down 5.29%, and Corporate Travel Management down 4.18% so far today. Over the last 5 days, the index has gained 1.78% and is currently 0.27% off its 52-week high. 7 of 11 sectors are higher today. The information technology sector is the best performing sector so far, gaining 2.45% and 2.28% for the past 5 days. On Friday, the benchmark index surged to a record high for a third straight session, closing 0.49% up at 7,295.4. On that note, let us look at a few key global and domestic developments. Let's look at this news first. According to American-British data company Refinitiv, S&P Global Ratings have revised the outlook on its long-term ratings on Australia to stable from negative, citing the country's swift economic recovery from the effects of COVID-19. S&P has revised the outlook to stable and affirmed the sovereign rating to AAA. It also says that the Australian government's swift and decisive fiscal and health response to contain the pandemic and limit long-term economic scarring has seen the economy recover quicker and stronger than previously expected by S&P. Moving on to the next news now, the Australian and New Zealand banking group showed total job ads jumped 7.9% in May from April, when they rose 4.9%. Australian job ads climbed for a 12th straight month in May to reach their highest since 2008. At 213,894, ads were up almost 220% on a year earlier, when the national pandemic lockdown shut down many industries. The latest shutdown in Victoria had yet to make an impact. The rise suggested demand for labour could withstand both a coronavirus lockdown in Victoria and the removal of some government support programs. Unemployment has fallen much quicker than policymakers expected, to hit 5.5% in April, down from a pandemic peak of 7.5% reached in July last year. The Australian-New Zealand banking group see the jobless rate at 4.8% by year-end and 4.4% by year-end by the end of 2022. The Reserve Bank of Australia is aiming to drive unemployment down to 4% or even lower, in the hope of finally lifting wage growth and inflation after years of tepid gains. Now let's look at some updates from the commodity space. The yellow metal is trading at $1,890 an ounce in the US spot market. The weaker dollar and the lower dividend yield is fueling the price of gold. There are reports that the world's biggest gold consumer, which is China, has granted permission to domestic and international banks to import gold in huge quantities into the country. In the US, the fear of rising inflation and unemployment is seen as potential reasons behind the current up move in the prices. When economic conditions do not support gain in the stock market, people tend to move their investments from equity to safer option gold. How the prices will unfold in the near future will depend on the performance of the dollar and the bond yield rates in the coming weeks. A sudden spike in demand could be seen due to China's import decision in bulk quantities, an upcoming festival and marriage season in India, as restrictions and lockdown will be eased. Australian gold stocks shine as bullion prices rebound. The Australian gold sub-index, the AXGD, gained as much as 1.6%. That's its biggest intraday percentage gain since the 31st of May. The sub-index tracks gold prices from the previous session, when they rebounded from more than a 2-week low after US non-farm payrolls did not rise as much as expected. The Australian gold sub-index is set to snap its 4-day losing streak. Sector heavyweight Newcrest Mining added as much as 2.1%. That's its biggest intraday percentage gain since the 26th of May. And shares in Silver Lake Resources and Northern Star Resources have climbed as much as 4.3% and 1.6% respectively so far today. Now, before we move on to the next trending updates, it's time for a short break.
At 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Hello and a very warm welcome back. I'm Rachel. You're watching 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV live from Sydney. This is the Stocks in Action show. Let's look at the crude oil space now. The benchmark crude indices, WTI and Brent, are trading at 2-year high price. Even the world's largest importing region is showing sluggish demand. Crude oil surged on Friday, with Brent crude surging past the $72 a barrel mark for the first time since 2019. That's after recovering demand and after the meeting of oil cartel OPEC Plus and the decision to stick to the original plan to remove supply curbs gradually. August delivery Brent crude oil futures traded at $72.03 per barrel, while WTI crude oil futures for July delivery traded at $69.71 per barrel. That's at the 6th of June at 11:28 this morning, Australian Eastern Standard Time. The largest crude oil importer in the Southeast Asia region, India, has imposed a month-long lockdown in several parts of the country. The demand for fuel went down significantly, leading to lesser tankers reaching its ports. In China, some refineries were shut due to their planned maintenance schedule, decreasing the oil import by the largest importer. The gross refinery margins are narrowing down as the inventory is going up. During May, fewer tankers ferried the Southeast Asia region. In the US, total rig count fell for the first time in the last 6 weeks, although the fall was by one rig only. Speculators use the rig count data to forecast the future output. As the WTI is trading near $70 a barrel, the decrease in rig count numbers may also indicate that the companies are planning to boost cash flow. Well, on that note, let's have a look at some news from ASX listed companies from across the sectors. Let's have a look firstly at the National Australia Bank. Their shares fell on a probe into anti-money laundering compliance issues. The country's third largest bank says Australia's financial crime regulator identified concerns with NAB's compliance with anti-money laundering and counter-terrorism laws. The bank says that AUSTRAC flagged issues with customer identification procedures, customer due diligence and compliance. The NAB says concerns have been referred to AUSTRAC's enforcement team, which has initiated a formal investigation. AUSTRAC has not made any decision over enforcement action as yet and was not considering civil penalty proceedings yet. Moving on to the next news now. The Star Entertainment Group stated that Australia's financial crime regulator, AUSTRAC, has launched an investigation into possible breaches of anti-money laundering and counter-terrorism laws at the company's casino in Sydney. The casino operator says the potential breaches found by the regulator, AUSTRAC, included concerns relating to ongoing customer due diligence and maintenance of a program to comply with those laws. Star Entertainment says it would fully cooperate with the regulator in its investigation. And now, before we move on to the next trending updates, it's time for a short break.
At 𝐊𝐴𝐥𝐤𝐢𝐧𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐴𝐥𝐢𝐧𝐞 TV.
Hello, welcome back. I'm Rachel and you're watching 𝐊𝐶𝐤 TV live from Sydney. This is the Stocks in Action show. This ASX listed stock is in the news today. VONEX has entered into a conditional non-binding term sheet to purchase part of the MNF Group's direct business for $31 million. The proposed transaction is expected to be transformational for VONEX, delivering considerable scale with more than 5,250 new business customers, more than 100 new Australian telco channel partners, and almost doubling VONEX's annualised recurring revenue on a full-year basis. The total proposed consideration is $31 million in cash payable in instalments, with $20 million owed on completion and intended to be funded predominantly via a debt facility and VONEX's existing money. Management notes that the sale is in line with MNF's strategy to simplify its business, grow recurring revenues and focus on growing the MNF wholesale business via reinvestment. Moving on to the next news now, technology company iXUP has struck a deal to acquire the whole intellectual property and associated technology product portfolio for $3 million from Data Republic a month after its financial collapse. This particular product portfolio has boosted Data Republic's high-profile global data collaboration product suite. The Data Republic technology assets became available as part of a rapid-fire contested sale process initiated by the administrators for Data Republic in mid-May. The purchase price represents a 94% discount to the almost $50 million expended by Data Republic to develop and deploy the Data Republic technology assets. Meanwhile, this listed stock is in the news today. Briar Resources has received binding commitment for a placement of 52.7 million new shares at an issue price of 7.5 cents per share, with 52.7 million free attaching options to raise $3.95 million. The free attaching options have an exercise price of 9 cents per share and will expire on the 31st of January 2023. The company is now funded to continue its large program of diamond reverse circulation and air core drilling planned across several gold and copper targets in Briar Basin and Gabanintha projects. Moving on now. Occupy Resources has reported on the 7th of June that it has started drilling at the Enmore Gold Project in northeastern New South Wales. The initial drill program consists of 8 to 10 holes for a minimum of 1,000 metre of reverse circulation drilling to evaluate the 2 priority targets identified at the Sunnyside and Bora prospects. One of the principal aims of the first pass drilling is to test the depth of extent of shallow mineralisation reported from historical drilling at the 2 priority prospects. The drilling is likely to be done within 2 weeks, with assays expected after that. And now, before we move on to the next trending updates, it's time for a short break.
Property by 𝐊𝐶𝐤. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐶𝐤 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐤.
Hello and welcome back. You're watching 𝐊𝐶𝐤 TV live from Sydney. This is the Stocks in Action show. Now, before we get started, let's take a look at the next news that we have. The Australian-New Zealand banking group showed total job ads jumped 7.9% in May from April, when they rose 4.9%. Moving on to some other news now. When economic conditions do not support gain in the stock market, people tend to move their investments from equity to safer options gold. That's where we've seen gold prices rise up in recent times. Moving on to our next news story now. Looking at this ASX listed stock in the news today, we have Vonex and also MMF Wholesale Business, who have seen their shares, we're just going to take a very short break. We have a small technical hitch. I'll be back very shortly.
At 𝐊𝐼𝐴 TV, our team of experts, anchors and specialists gear up to provide you with trending and breakthrough business stories, insights and market updates. The BNPL space did enormously well in 2020 and the trend may repeat in 2021. If you do not wish to miss the high-level insights, do watch out for 𝐊𝐼𝐴 TV. Brace yourself as we bring to you the plethora of different sectoral and market intelligence as well as analysis on a daily basis. 𝐊𝐼𝐴 TV, keep watching.
Hello, welcome back. Apologies for that small technical hitch there. I'm Rachel and you're watching 𝐊𝐼𝐴 TV live from Sydney. This is the Stocks in Action show. This ASX listed stock is in the news today. Spark Technologies has entered into a memorandum of understanding with one of Australia's leading environmental remediation companies, JBS&G. Under the terms of the MOU, Spark will be performing immediate testing of its proprietary functionalized graphene for the absorption of pair and polyfluoroalkyl substances via research and development successfully undertaken at the University of Adelaide. The joint project with JBS&G will involve developing a pilot plant for the absorption of per and polyfluoroalkyl substances from contaminated water via graphene filtration. The pilot plant will be situated at a site where JBS&G is undertaking remediation. Moving on to the next news now, the precious metals focused explorer Red River Resources has received a judgment in legal proceedings against its unit Cromarty Resources relating to the payment of royalties. The company reports the initial estimated range is around $15 million to $20 million in total for unpaid and future royalties. They are reviewing the judgment with its lawyers to assess its options and reserves its rights to be paid by the company. Thalelanga Copper Mines started the proceedings in 2019. Moving on, Japara Healthcare has received a revised non-binding indicative proposal from Little Company of Mary Healthcare, a non-profit aged care provider, to acquire the entire stake in the company. Japara stated the indicative offer price has been revised to $1.20 per share, implying a deal value of $320.7 million, compared to its earlier offer of $1.04 per share. The offer price represents a premium of 7.6% on the company's previous day close. Okay, that's all for now. Stay tuned with 𝐊𝐼𝐴 TV for more live market updates. We'll be back with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.